So DTI, also known as debt to income ratio, is actually the ratios that lenders use to make sure you qualify for your new home loan. What we look at is we look at what's on your credit report going out monthly as far as your monthly expenses. We don't take into consideration anything that's not on your credit report. And then on your income, we actually go off your gross income, not your net income, meaning before taxes are taken out. And then we look at those two numbers and see how much money you have left after paying everything that's on your credit report. Then those ratios is what we look at to determine your eligibility. Now, VA has it at 41%, but at VA Loan Spot, we actually can go up to 50% or even higher depending on your credit scores on the ratio that we can get you qualified for as far as your overall debt to income ratio. There's also a housing expense ratio that goes off of just your housing payment, your mortgage payment compared to what you have coming in monthly as far as your gross income as well. So tweaking the debt to income ratio in your favor is a couple different ways you can do that. First, let's look at the things on your credit report. You're going to look at the monthly expenses you have going out on your credit report. If you have a credit card, let's say, that has a $5,000 balance on it currently, and you can pay that down to, let's say, $2,000, $1,000, or even pay it off, the lower your balance is the lower your monthly payment's going to be. Therefore, that affects your debt to income ratio by lowering that monthly expense. Another thing to look at is your homeowner's insurance, because your homeowner's insurance and your taxes on the property is also included in your debt to income ratio. Therefore, shop around for the lowest homeowner's insurance rate that you can get, because that monthly payment is going to affect your debt to income ratio. Another thing as far as the loan goes is your interest rate. The lower the interest rate, the lower your payment. So that's a good way to get your debt to income ratio down as well.